10 postcodes around the nation have been analysed as likely to suffer mortgage stress when interest rates go up. And you've heard it from me, and I'm not the only person saying it. Interest rates are going up, and the Reserve Bank meets tomorrow, and we could see a rate rise tomorrow. If not tomorrow, then this time next month. So 10 postcodes around the nation have been identified as having the highest level of mortgage stress. 6 of those postcodes are in Victoria. They include places like Narre Warren South, Berwick, Roxburgh Park, Cranbourne, Sydenham and Pakenham. So if you live in one of those areas, give me a call, 133 693. Analysis by a group called Digital Finance Analytics, DFA, says that if interest rates go up just 0.5%, 143,000 households across these postcodes might struggle to pay the mortgage. If interest rates go up 1%, which I think is more than likely, the number of households under mortgage stress rises to almost 322,000. Our next guest participated in this research. He's the CEO of Joust. It's an online home loan marketplace. Carl Hammerschmidt, good afternoon.
G'day, Tom. How are you?
Well, good. So you and DFA, the firm I mentioned before, you sort of did the research together, did you?
That's correct. Yeah. We've got a rolling statistically valid survey of 52,000 households across Australia. It's a longitudinal study which allows us to really dig down into the spending and financial circumstances of Australian households across the country.
So how do you define mortgage stress? Is it households who might not be able to pay the mortgage at certain rises in interest rates?
Correct. Yeah. Look, it's based on net cash flows, so money in and versus money out. I guess we define mortgage stress really simply as being where household occupants are either able to pay their mortgage under duress or they're actually behind in their mortgage payments in some way. And as you said, that's 42% of mortgage households in Australia currently.
Right. Now, it's disturbing to see that you've got the 10 most stressed postcodes around Australia. Of the 10, 6 of them are here on the outskirts of Melbourne.
Yes, look, absolutely. There's a very large concentration, as you said, around those southeastern and northwestern corridors. In those areas, I guess, if you look at it on a demographic basis, it's really those younger, often sort of first-time home buyers who are being hit the hardest, and many of them have, bought in the very low rate environment that we've had over the last couple of years, and they've bought into these high growth development corridors.
Because you see, I've looked at forecasts which suggest that interest rates are going to go up perhaps 1.5% to 2% higher than what they are now. Now, that'll get passed through plus some by the banks on mortgages. So you could actually see the interest rate being paid by some of these households almost doubling over the next year and a half or so.
Look, absolutely. I mean, you're talking, on the average home loan of, $500,000 or so. You're talking about $1,000 a month in extra repayments, and that's significant, particularly when it's coupled with all of the inflationary pressures and cost of living pressures that everyone's under at the moment.
The banks are supposed to what they call stress test mortgages. So when you borrow money, they say, well, let's not just use today's rate. Let's assume it's a fair bit higher. Do you think the banks have really done this?
Oh, look, there are all the new responsible lending practices that have come in since the Royal Commission, and there's the best interest duties at play with regards to how brokers and banks are meant to lend, and the industry is meant to have been operating by those for the last couple of years. I think you've got a confluence of circumstances currently where, as I said, with the high cost of living, the cheap rate of money, and I guess this unstable environment, which is really going to start to make everyone feel the pinch.
And finally and quickly, I don't know if you had much of a chance to look at Anthony Albanese's plan, but I mean, essentially, if he's elected, he'll have the federal government giving, well, not just first home buyers, but anybody with an income up to $90,000 for singles or $120,000 for couples, the federal government might subsidise or essentially buy up to 40% of the value of their home. Do you think that's a good idea?
Look, I think that any initiatives that look to help to get people into affordable housing should be considered. There's a range of views around this. It could put heat under the market. It could benefit, as you said earlier, the sellers rather than the buyers. There is a point of view that also says that this is actually it's well targeted and that it could actually not have too much of an overheating effect on the market and might actually help some people get into the market where they might not otherwise. It's it's a very, very tricky market, and people should, I guess, really buyer beware when they're going in and looking at leveraging heavily against some of these new purchases.
As the Romans used to say, caveat emptor. Thank you, Carl Hammerschmidt, the CEO of Joust online home loan marketplace that co-authored this research into mortgage stress.